the reason why you want to focus on distribution. So again, not enough founders I speak to understand this or think about this, but if you try and piggyback off someone else's distribution where they have the power over the economics, they're going to compress your margins and they're going to have the final say around your economics. If you build something and then someone has users like Coinbase or Binance, and you say, oh, I can build this for Coinbase and they can share it with their users as distribution, that won't work because they're going to take all the margins to themselves. They're going to squeeze you, and probably the product is highly undifferentiated. And so it becomes a commodity, and then you end up trending towards zero. And so I think, again, here, this is why it's so important to build distribution yourself, is because when you own the distribution, you own the end user, you own the economics, especially in the application space, which is where we're at right now in crypto.
This episode is sponsored by Canton, the only public permissionless blockchain built for institutional finance. We'll hear more from Canton later in the episode. Blockworks Digital Asset Summit is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets, and make sure to use code BELL200 for $200 off at checkout. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed.
All right, everyone, welcome back to another Bell Curve. You got me, Xavier, Myles. Myles holding it down from snowy Denver.
No, it's like sunny. It's sunny Denver. I show up here like with all my Boston winter clothes, and it's like 60 degrees, in the daytime. But no complaints actually on the weather side. And I'd say it's been a good week.
What are the vibes like there, Myles?
It is quieter. Like I've been coming to Denver for I would say this is like my third or fourth year in a row. And most prior years, I've never even stepped foot in the main event, because there are so many people and more like interesting side events going on, that you can just meet with much easier, like outside of that. Right. And this is the first year I've actually there hasn't been like enough people or side events like for that to kind of be my mode of operation. So yeah, I was there today, and I would say maybe I'm just getting a little old, but walking around the booths, noticed that there are less names that are like widely recognizable, like big DeFi names that you would expect to see at these things. For the most part, there's not a lot of, talks or activity outside of the stuff that's already working. So I can probably classify that as stable coins, like everything cross-border, basically that fintech intersection, RWAs in DeFi. And then I think outside of that, it's all the one frontier that people are super excited about, which we've covered before in the show, which is like the intersection of
agentic
agents paying with stable coins, and everybody having their own, flavor of every need that needs to be addressed in that sort of, the entire stack, whether that's layer ones that just, have a bunch of judges to determine whether an agent did the right thing or not, or like reputation systems for agents. I would say less on the decentralized training than, maybe even a year or two ago. Obviously X402 and then all the protocols that are being built to set the standards, that's very, present and being talked about a lot. So yeah, it's a weird one. I'd say better than conferences where you come in the thick of frothy bull market and just there's so much noise that it's really hard to filter through. There's definitely a better signal to noise, ratio today than there was probably last year. But it's, I wouldn't say as the level of excitement is nearly where it was. I think 2 years ago was actually the best ETH Denver, but that was like in the middle of the infra craze before all those infra tokens got crushed.
I mean, Xavier and I were at ETH Denver last year and had this fateful talk that I keep giving Xavier credit for publicly, but it was also, I mean, to me, that feels more on the money than what people were interested in a couple years last year, which was, I mean, there was this AI crypto intersection, but it was very nebulous, and it was decentralized training and inference and bots and all of this stuff. And I would say I'm still very bullish on AI creators. I think AI XBT, not necessarily that ticker or project, but things like that are super interesting to me. But people were really interested in Bitcoin L2s. Ultimately, I mean, I've said this before, I think we're still a little ways out from on-chain agentic payments in crypto, but it's obviously going to happen and it'll be big. Someone will make a ton of money facilitating that. And RWAs are very real, and it's kind of the thing that's working. So that makes a lot of sense. Myles, give us a sentiment pulse check. Like, 1 is full-scale crypto winter bear market. No one's happy. 10 is, people are renting yachts for the after parties and stuff like that. Where are we on a sentiment scale?
The people who are working on the things that are working, like, are actually be like showing, we'll talk about this later, but like where there's market pull, right? Like the stablecoin issuers are inundated with demand, from institutions, from chains, from everything, right? They seem very happy. But it's less like the usual crowd that's happy when things are working, because those are, of course, like, companies, equities. There's no tokens. There's not like people are like speculating on this, use case that's, kind of a exploding and very successful. And then I would say like there's a sentiment of optimistic sort of and hope for like the AI side, but you can tell it's not like, yeah, guys, like look at the charts, they're going up and to the right, or look at the amount of demand we're getting for this stuff. I think that's the long and short of it. Like, it's less of a speculative, like positive sentiment. It's more enterprise heavy for the stuff that is working. And you see I saw like nothing in terms of like social fi or like, it kind of reflects like the crypto Twitter to some extent. Like outside of financial use cases, there's just not a lot of stuff here. Now there is still some weirdness, some crypto weirdness, which I love. I saw people in some very interesting outfits. I saw, on one of the booths where you step in and they have like dollar bills flying everywhere and you try to like grab the dollar bills. I'm like, okay. So like the mercenary capitalist still has not totally left the space. And the degens have not totally left, but like, yeah, there's definitely less of that.
Nice.
Quiet from the Cosmos crew, who have always
spending.
I've always loved spending time with them at conferences because they're always kind of like, yeah, like we're ahead of the curve, and now they're just gone. It's kind of
the Cosmos crew has moved on. They've already won, mate. There's no need for them to spread the good word anymore. They've already won. They're sitting back, relaxing. They've seen how it all played out, and
one is a pretty interesting way to describe what happened. As a Cosmos sympathizer, I feel like I can get away with saying that, but all three of us are big. Yeah, I love the spirit. Exactly.
I think it's interesting insight, Myles. I think one question to ask, I guess, I'm not sure if you were at DevConnect, but funnily enough, the most recent Ethereum event was in November last year, and there was actually pretty few crypto AI like side events and meetups, which surprised me. Like I went to the event thinking there'd be a lot of this, and there wasn't. Maybe in the last few weeks, like post OpenClaw, I imagine there's a lot more sort of craze and hype, and more like Stripes, etc., entering the space bigger than ever. Are there a lot of events on crypto and AI now, or is it like still small like it was? Okay, I mean that's been a big turnaround then, because a few months ago it was very different.
Yeah, when I looked at the side events, or I looked at like the dedicated stages, like it's dominating. But it's different, right? It's not like as much about decentralized training or like the originals, probably what was taking up conference space like 2 years ago. It is more like talking about how do we solve the trust problem for agents. We these are great payment rails for agents, but everything around it, like how do we manifest this future that we think, represents the perfect marriage for crypto, or like, solves this identity crisis for crypto and what it's useful for. And that to me is the closest thing I've felt like to, the sort of attitude or like, atmosphere of like 2 years ago when it was like, okay, restaking opens up a new design space, co-processors open up a new design space. And like, you didn't know just exactly how soon or if this would be useful. It would, but it, that's where people were clearly placing their attention bets.
I'd love to get into, maybe that's a good lead in into this week's topic, which is distribution. And we're going to tackle it from a number of angles. So maybe the strategy from an infrastructure perspective, from an app perspective, and then I think AI and what does distribution look like in the world of AI is a really interesting topic. I would like, actually, if we can maybe get 10 minutes at the end. Actually, one story I'd love to get your guys' take on, just because we had this whole debate about Hyperliquid and buybacks and everything. Did you see the Hyperliquid Policy Center that got set up seated with $28 million that Jake Travinsky is leading? I have to say, I feel like this is an incredible use of funds. This makes an enormous amount of sense to me. We were just talking about it on the last episode, so I want to bring it up. But yeah, so Jake was previously at Variant, and he announced a couple weeks ago that he left, and then that he'd be leading this policy institute, and he was seated with it. $28 million worth of hype, which
super interesting. Okay, so this is not going to buy back hype; it's actually going to fund, the regulation side for them. Okay, I totally missed that.
Yeah,
that's big. That's high signal. Jake is amazing. Variant is an investor in Delta, and he was our go-to person for anything regulatory. He knows everybody. Trust him. So that's a huge win for Hyperliquid.
He's a beast. It's him and Rebecca. I feel like I'm sure there are many more, but those are just the ones I would have a high opinion of. But yeah, I think it's a massive win for Hyperliquid. There's a great example, by the way, of, I feel like I would, as a hype shareholder, far prefer 20 million to go towards this than a buyback, where I feel like the upside here is, many multiples of the 20 million that you would spend, right?
I mean, speaking of, I guess we mentioned, how you could use the cash instead of buying back the token last week. Jake, a lot of legal experience in terms of like how they're redistributing the cash. I assume the growth now they're looking at is actually that regulatory front. And that's what we were chatting about last week as well, where it makes sense to use that cash to lure the best people in there and to like help them outgrow, just a kind of crypto native audience, but actually push into larger global markets that are regulated and actually start competing with Binance. So for me, it's actually no surprise whatsoever that they're using the cash like this to grow their market share like that.
It's a good use of money. And I mean, from at least my perspective. And maybe this gets us, talking about branching out and extending into new audiences. Let's talk about distribution. And distribution is a word that people have focused on for a while in crypto. I'd argue not as much as they maybe should have in the past. I'm curious, actually, if you guys look back at all at the FAT protocol thesis, and with either rose-colored glasses, a different era in crypto, has it been totally repudiated? I don't know, but there's this kind of saying that often gets quoted of first-time founders think about products, second-time founders think about distribution, and maybe because of this, just to set up the relationship for distribution in crypto and relationship to the customer, I think we had this idea of a FAT protocol thesis, which Joel Monegro, partner to Chris Berninsky at Placeholder, released, which is the idea that in the internet era, there were these protocols that were very thin, but they were open to everyone, and they created a lot of value, but they didn't capture it. You had fat applications that had access to the customer built on top. And he argued that in crypto is going to be opposite. You're going to have fat protocols with thin applications. 8 years later, it would seem as though that's not necessarily the case, although you could say scoreboard, look at Bitcoin. But it seems now that the attention has flipped and that we are 100% focused on distribution and a connection to the customer. And we can talk about what exactly that means for different categories. But I guess just to kick it off, do you guys think differently about the FAT protocol thesis? Do you think it's been repudiated, backed up in some senses? Do you think that the dynamic in Web crypto is going to be the same as it was in Web 2. How would you score or rate the mental frameworks that this industry has had on this subject for the last almost decade?
I mean, yeah, I can start maybe. I think the fat protocol thesis, maybe where it was off, was probably in two places. One, I think it assumed that the early winning layer ones would have more defendable moats than it turns out that they actually have in reality, right? I don't think this idea that chains could be or will be like commoditized, was like an assumption in the fat protocol thesis, which I think has actually turned out to be more true than not, right? And it basically positions like apps as this thin layer on this, on these networks that, there's little choice as to which network you would deploy these thin apps to, because of the network effects would be so powerful with the early winners, and the switching costs would be, higher than they actually turned out to be. I think that's wrong, right? And so now I think like the fat protocol thesis is, it's lost also because maybe developers like just want more control, right? And I think at the time, I don't think it was underappreciated just how like little these networks could cater to like real developer needs, right? So now we have proliferation of these networks, and sometimes the apps are just vertically integrating the actual chain itself. But yeah, I'll pause there. Zave, curious to hear your thoughts.
Yeah, I think great points, Myles. Just briefly, for me, some elements of that protocol thesis still stand. You're seeing some of the biggest winners still today, Ethereum, Solana, etc. I don't think these are going away anytime soon, and they have captured a lot of the value of the applications that have launched on their chain in the first place. I think, Myles, you mentioned something really important there around the kind of moats of these fatter protocols, let's say, like Ethereum and Solana. Ethereum, the way it executes and runs the compute is simply EVM. And I think they came out first, built a really solid developer ecosystem, and then they got a lot of liquidity, and that outgrew all competitors essentially. And I think you haven't really seen another EVM chain yet reach that same velocity. The reason why I think Solana has staying power is, again, because it kind of flipped the EVM on its head and then created the SVM, and then they had a lot of developer network effects, super fast, therefore liquidity, more apps, more users, etc. And since then, you've seen, again, it's been too hard for other SVM projects to compete. And so what happens is a lot of the best applications flock to these winners, and so they capture a lot of the value from having those winners. And saying that, I'm also of the impression that we're in the very early innings of the application era. And so I do expect that we could have winners potentially as big as some of these fatter protocols like Ethereum and Solana, but we're in the very, very early innings of this, which we'll explore in this episode around like, what are these apps? What have they done well? Like, how important is distribution, and can they actually capture more value than the protocol underneath it itself? And I'm of the impression they can long term, but I think we're still in that transition period.
Before we get back into the episode, here's a quick word from our sponsor, Canton, the only public permissionless blockchain built for institutional finance.
TradFi wasn't built for 24/7 markets. DeFi wasn't built for regulated institutions. But Canton is where the power of finance meets the promise of blockchain. The only public blockchain with institutional-grade privacy, true composability, real assets, real markets. Why reinvent finance when Canton makes it work the way it should? Canton, where finance flows.
So I think we've talked about this before. Myles, you and I've done a whole episode on this, just aggregation theory and the smiling curve that people have pointed out as a way of capturing value across, or as a rough way of quantifying a relationship of value capture across supply chains. But the idea just being, if you were to look at the beginning and the end of the supply chain, those typically do well. There's lock-in. This was originally used to describe the computer industry, where there's a lot of patents and R&D competency that gets built up. And then the end, where you have the access to the user. It's the middle that gets squished. And that's been my, at least, theory with crypto for a long time. And One thing though that I've been continuously sort of surprised by, and it's in my too hard bucket now of, I mean, just thinking about assets like ETH and Sol, um, they have, I think, definitively, people have always said, it doesn't matter, you're not going to be an Ethereum or a Solana user, and I think that just hasn't really turned out to be right. I think that those ecosystems are kind of more siloed than you might think. There's a cultural element of people thinking of themselves as an ETH or a Solana person or something like that. And a lot of the like you kind of see something like Phantom, which and MetaMask, which they're now interoperable with their other networks, but it's kind of like too late. And yeah, I don't know. I think I we've talked about on this show. I think that it's very hard to understand really how to think about ETH or solely assets at this point because the barriers to entry are so high for new competitors, which feels good. But yeah, on the distribution side, I think it's going to consistently be some of these new applications that end up, having, they'll that leverage of having direct relationship with the user is super, super important. Um, why don't we begin on the app side of things? I'm curious. This is kind of the big question that everyone has at the moment, which is how do you gain distribution? And say if you work with a lot of, especially new application teams. So obviously, if you're Coinbase or Binance, great, you have distribution and you leverage that from a product standpoint. But let's say you're starting out today, right? Like maybe, I guess, you could give a rundown of what has historically worked on the distribution front, and then how are new apps thinking about it? And then Myles, we can talk about infrastructure a little bit.
Yeah, absolutely. Thanks, Mike. Yeah, I think right now, in terms of where I spend most of my time, there's kind of two fields. One is the crypto and AI intersection, and the second is the more consumer app side, where I think there's a lot of opportunity right now in crypto to build really fantastic outcomes there. So on the application front, we have invested in many apps already at Fractus, and whenever a team comes out now to pitch us, I was saying earlier in this call that with AI now, it's never been easier to build any product almost and ship that faster than ever. So there's a real question of like the market itself and what the market wants, and not just what the market wants, but how do you get to the market in the first place? That really, for me, is the key question that not enough startups ask themselves before they go out and come up with an idea for a product. And if you look at all the winners in crypto, they've actually all had unique distribution strategies. And I feel quite strongly about this point, the fact that like to win as an application, you need to have a unique, novel distribution strategy that hasn't really been tried before, or maybe it has been tried before and you have a new spin on it. I don't think you can copy someone else's distribution strategy because I don't think that will work. Differently to infrastructure, which Myles will talk about in a minute, around that is a bit of a playbook that people try and kind of emulate from each other. On the application side, I think all the winners have done it differently. And so I'm just going to go through a few names here, which I've thought about a bit, in the past few months of what has worked for them. And then as I work with portfolio companies, trying to innovate around maybe taking some inspiration from them around what has worked and what hasn't. So with Hyperliquid, I think we can start there as, a team that obviously is successful right now on the application side. Here is quite interesting because they borrowed, I think, some of the infrastructure playbook to build their own community and distribution. They built a fantastic app and then, airdropped a lot of tokens to their stakeholders and made them quite rich. And then that made them talk a lot on social media. That really like pumped them up. That gave them their own sort of native distribution from the fact that so many people had a stake in that game that they wanted to share about why it was so good. Then people on board to the product. Mike?
I'm curious because it's so hard to do the counterfactual of this. Do you think that the airdrop was critical to their distribution and success?
100%. I think if Hyperliquid was okay, it's all related, but if Hyperliquid wasn't a great product and people didn't get rich, I don't think it would have had as much distribution. And I think they've kind of taken that playbook a bit from Ethereum and also Solana in terms of early holders getting quite rich with also really good technology that people can get behind and clearly like enjoy using. So I think Hyperliquid is the most similar playbook I've seen on the application side to like historic playbooks that has worked. I think they're going to be the only one that works here. I think people are going to try and copy this playbook now going forward, and it's not going to work. So congratulations to Hyperliquid for getting on that early, because like I could be wrong, but I really can't see another distribution strategy similar to Hyperliquid working like that in future. The second one I want to talk about is Polymarket. Polymarket, when they started building out, they got really good distribution through media. because people were saying that their stats and facts were better than the polls, and there was a narrative around that. And so Polymarket stats and odds were popping up in media places, and so they were getting a lot of eyeballs, even from a non-crypto native audience. And Polymarket is one of the only teams in crypto that has gone really non-crypto native, and the way they've done that is through traditional media, which a lot of crypto cannot crack into. So again, a very novel distribution strategy, which no one had attempted before Polymarket really went live. And so again, very interesting to look at. Athena, another successful app. I think they've done an incredible job, especially with crypto native distribution to start with, and then in future, like more distribution towards banks. They built a very strong brand, which is trusted in the early days, which I think is a good start to build any distribution strategy. They align stakeholders very early, a lot of Ethereum whales, etc., people very native to DeFi that had a lot of capital already, so they could start that flywheel and get that money in very, very early. The marketing was great, and they also got a lot of distribution through exchanges. I'm thinking like Binance, etc. So they align those partners very, very early on. Athena's distribution strategy, again here, completely unique. No one has tried a distribution strategy like Athena, especially in the last year or two. And again, I can't see anyone copying that strategy and being successful. The next team I want to spotlight, which has raised capital from a traditional fund more recently, is called FOMO. So FOMO is very, very simply a social trading app. Again here, like a novel distribution strategy, at least in crypto, borrowed from more Web 2 and trad side, which is sort of around social sharing, easy onboarding, great UX, commenting on other people's trades. It's all the things I'm mentioning right now, very social, and I'll get back to that in a minute after I finish naming the list. The next application that's done really well recently is Axiom. Axiom, again here, completely different to everything else I've just mentioned. So one thing that Axiom has done is cashback. Again, that's not like a massively novel distribution strategy, but at least the way that they've executed it in crypto has been really great. The second thing they've done is actually referrals, which in crypto hasn't really worked that well pre-Axiom, but they've done a really good job of like referrals, earning from people you refer through. And I think they've incentivized their community very, very well to like spread the word. You always want users distributing your products, and I think Axiom has done that like really well. The last example I'll name for now, which is also interesting, which I think people don't talk about enough in the space, is the kind of like Telegram native distribution that things like Trojan, Banana Gun have really leveraged. And again, pretty simple with the thesis here around why it's worked. I mean, it's easy to copy, easy to share, easy to use, easy to add people. Like it's easy to like make viral. And so I think if you look at those 6 apps, which are all working quite well, and you could name some more, I'm talking more like kind of end user apps as opposed to DeFi apps. All of them have completely different distribution strategies. And I feel very strongly that the best apps going forward will continue to have unique distribution strategies. So whenever you analyze any application, you should always be thinking like, what is novel about the distribution and how can they scale that distribution more and more over time, which is also an incredibly hard thing to do.
I have a framework for how I think you could generalize the different approaches to distribution, and I think Zabe, those are all great examples, and they all basically fit. So, if I were to look, I was kind of thinking through this before the episode. One and several of the ones that you describe, I think, are piggybacking on an existing network. So this would be, and I think there's a timing element to this as well, where you can kind of use it to get escape velocity. But some of the early Facebook apps, I think, are like a really good example of this, or understanding and leveraging Google, like Google AdWords, right? Before, when they were still very cheap. There was actually a time where you could get paid to advertise on Google, which is insane. But it was a way where you can kind of borrow the flow of another network and get to a point where you become kind of the brand name. There's another one that we didn't talk about here that I would love to get your guys' take on, because I think actually that wallets do this, which is controlling a scarce choke point or owning the gate. Probably the best example of this of all time is what Windows, the owning the operating system. So everyone wanted to use computers. You got to borrow that trend, but then everyone was dependent on the operating system, and then all the switching costs compounded to the point where no one could move off of it, and they just had unbelievable distribution that they could pump their own first-party applications into, and they probably created the best SaaS, SaaS package of all time, which is the Office suite, right? Like that's probably one of the best SaaS products of all time. So piggybacking, owning the choke point. One thing that this maybe Zave fit into your description of euphoria, but like or FOMO, sorry, rather, is building virality into the product, Weirdly, you know what I thought had a really good example of this was NFTs. It had virality built in because you'd make it your profile picture. It's kind of the best building virality and distribution into the product. It wasn't enough to save NFTs, but it was a really good growth hack for a little while there. Um, and then the other is basically aggregating. And maybe we'll get to this when it comes to LLMs, but moving one layer up and filtering and helping um, curate information. So Google, Spotify are great, but Google's the best probably example of this. Facebook, though, things like that. So I think those are the different lenses. And when I looked at the examples that you were describing there, I think many of them are like borrow the flow, like piggybacking on social or other media channels.
And what's interesting about Axiom and FOMO in particular is like those are not insanely novel products, right? Like they are just more or less like trading terminals and serving as aggregators. They win on UX and they win on these distro hacks that are either meeting users like where they're at today. I could say the same for Polymarket too, if you're like seeing data from Polymarket on CNBC, right? Or, you know, basically scaling up and manufacturing this word of mouth, like virality. And I think that that's interesting just because like crypto is, for so long has always been trying to create net new novel things that are totally different than anything has ever existed. And it's rarely kind of meeting demand where it's at today. Right. And that is like fine because for a long time we were kind of working on things that were like unexplored and unrealized. But the reality is like today as an app, like there are things that are working, like as we were talking about in terms of like the Denver themes. And so, you know, I think FOMO and Axiom are great examples of like, you don't need to create like something that's net new, like never seen by the world, hard to explain to consumers, right? Actually, the easier it is to explain to consumers is sometimes going to give you the highest chance of success. And then you just spend all your time on just manufacturing like that viral, you know, feedback loop or whatever it is, right? So we'll see more of that. But that's also why we see less crazy ideas in crypto today, I think, as well.
Yeah, just to build on a few points you guys mentioned. So, yeah, firstly, I think, Mike, you said it well. A lot of the distribution we see in these applications, they're very social, inherently social. And I think they also build narratives at the same time. And these also spread socially. For example, like Hyperliquid was kind of like VCs are bad. And then everyone like rallied around that and it became consensus VCs were bad. And that was good for distribution as well because they aligned with that message. Same as like Polymarket, you know, news are better than prediction markets are better than the polls. I think like that as a narrative as well, especially around elections, people rallying around that, building consensus around that, sharing that as well. Like they're all very social. Going to where the users already are is super important. You know, you want to be across like Telegram, X. You also want to be at conferences. You want to be in the news where people are reading news. But also at the same time, you need very fundamental product things like a good UX, a good product, etc., and a good way of onboarding users in the first place. I don't think distribution can work unless you have actually a sound product. But building a sound product, again, is getting easier than ever. So it's more important to focus on distribution, I think, than ever. The reason why you want to focus on distribution, so again, not enough founders I speak to understand this or think about this, but if you try and piggyback off someone else's distribution where they have the power over the economics, they're going to compress your margins and they're going to have the final say around your economics. If you build something and then someone has users like Coinbase or Binance, and you say, oh, I can build this for Coinbase and they can share it with their users as distribution, that won't work because they're going to take all the margins to themselves. They're going to squeeze you and probably the product is highly undifferentiated. And so it becomes a commodity and then you end up trending towards zero. And so I think, again, here, this is why it's so important to build distribution yourself is because when you own the distribution, you own the end user, you own the economics, especially in the application space, which is where we're at right now in crypto. And that's why I think people who are pushing the boundaries and the frontier of like distribution strategies, including with AI, which we'll talk about later in the podcast, I think are really going to be the winners long term in this space.
Yeah. And I think this goes back to fat protocol thesis being right or wrong again. Like if you notice 2 years ago, I think two of the leading DeFi protocols like Uniswap and Aave, you can extrapolate this more broadly, I think, for like DeFi protocols is different, right, than like an Axiom or a FOMO that is literally just like the thin layer at the top. They were optimizing for like They're like, okay, we've found PMF and users like use us directly. Now let's become a platform, right? And I think we've seen a like reversal of, those decisions and being like, actually, we're the entire, like, we can't be this or like the scale of this platform and the amount of developers, like, in the economy that's going to run on our platform is actually not as big, or it's actually harder to like manifest that vision than it is to build a retail app, right? And get closer to the customer again and monetize and like, create a moat based off of the user wanting to go on their phone to the Aave app, to the Uniswap X app, right? And that's funny because as an investor a couple of years ago, it was always like, you were looking for the grandest vision, the biggest possible platform, the largest economy that could be, and developers that could be like, launching on this thing. And yeah, I think Hyperliquid's in an interesting spot right now because they did start narrow and now they are trying to become a platform, but they still, are trying to balance that keep it staying close to the customer. But I don't know. It's an observation.
Everyone in crypto loves to talk about transparency, but would any serious business publish its payroll for the world to see or hand competitors its contracts? That's not a feature. That's a bug. And it's why most financial institutions can't operate on today's public rails. Canton Network is different. It's the only public permissionless layer 1 blockchain built with privacy at its core, sharing data only on a need-to-know basis. That's why Goldman Sachs, NASDAQ, and Broadridge are already building on the network. Only Canton delivers the network effects of a public chain with the privacy and control real finance demands. Learn more about Canton by following the link in today's show notes.
I was going to kind of get to this later, but I think one very tactical tip, and this is not possible for every founder in every business, but I was reading this piece called Founders Are Cult Leaders. And generally I hate this kind of talk, but sort of agree with it a little bit from the perspective of you need to unite people behind an idea. If you're doing any enterprise, if you're the head of a state or a business, you need to really unite people and motivate around ideas. And one thing that makes your distribution much easier, actually, this idea of it's not, you should pick something hard. And sometimes counterintuitively, it's easier to do something hard than to do something easy. And I think the reason for that is because when you pick a harder, more interesting problem, you can attract better talent.
There's less competition.
There's less competition. The other reason is because it's more interesting to talk about. So, who I've seen do this unbelievably well? I think this guy's the GOAT at almost like, is Elon Musk. Elon Musk's always he's a reality warper, right? He's trying to warp reality. And the more interesting stuff he has to say, and he aligns that to the actual work, the easier it's going to be to get distribution. So you're Elon Musk, you're talking about putting GPUs in space. That's interesting. That's going to find its way all over social media. That's a very hard thing to do. And again, it doesn't apply to every single business, but finding a difficult problem that is interesting is probably the best thing you can do for distribution. I mean, just think about if you're like an early founder out there, right? I'm trying to get on this conference panel and like, well, what do you want to talk about? Counterparty risk in CeFi. It's like,
yeah, No, I mean, it's such an interesting point. And I think it's actually probably a good segue to like the infrastructure side that I was, have a couple talking points to talk about because it's like, I would argue that has failed in crypto over the last 2 years.
Has it failed, or have they done too good of a job of it? Because
no, if you cannot, if it turns out,
right?
If it turns out that there's not market pull for the solution that you've then, and this open design space that you've then created, right? Which, to be fair, is different than putting GPUs in space. That's a hard problem that, people already have demand for GPUs. They want more of them, right? And there's benefits to putting it in space. So I would argue that is the sweet spot of like a hard problem that's really, easy to talk about, and like you can get a lot of attention with something that will have demand, right, when it's available. Whereas I would say like Eigenlayer struggled in terms of actually like the level of demand once it was ready was not, nearly as close to what they thought it would be, right? Is this starting to make sense a little bit?
It does. It does. It's just interesting though, if you think back to many of those, Eigenlayer is maybe a good example, kind of talking about refining trust in the same way that was a powerful metaphor that Shriram gave.
Oh, and crushed it. Yeah.
And
And like
murdered it.
got people so excited. Yeah.
I mean, and I think this is why crypto had such amazing distribution in the beginning, because it dreamed so big. The ideas were so intoxicating, and it was
Without a
interesting
doubt.
to talk about. I mean, it's just interesting to talk about. And I guess it weirdly, the space I think did quite a good job of picking a super interesting problem. And then it got a lot of distribution that way. This is what we called getting nerd sniped in crypto. That
Yeah.
was distribution in a way.
Yep. Especially for the investors, right? And less so like the demand side of people that are like dying to try these products, like and pay for them right away. So like the framework from the infrastructure side that I think about a lot is there's a good book basically introduces market pull or technology push as the two basic ways that like new business ventures come into the world, right? So market pull is like you identified a problem, right? That needs a solution in the market, or a need for the solution. You keep the problem constant, and then you figure out the shape of the product that addresses that problem, right? Technology push is, hey, we have this new technology capability, right? Non-use case specific. This is like what layer ones are, basically. Like you've got a feature set that you hold constant, and then you go find a market, right, that can leverage this feature set to manufacture market pull, right? It's like, well, we have this thing called the EVM and smart contracts. Oh, this introduces a new class of applications. Let's likely start with financial applications, right? And so Ethereum was actually quite successful in taking this like technology push approach. Not with every use case, but at least with early, financial use cases, right? And so I think crypto historically, like, when you're building infrastructure, like there hasn't been a ton of stuff that is like very clearly working and there's demand for it, right? Until like this past 2 years with stable coins, prediction markets, RWAs, things like that, right? So infrastructure has historically always been technology push, right? And the winners were really good about identifying like those markets and being very hands-on about getting builders to manifest like what's possible in those markets. And more recently, it's kind of fallen flat, right? Like I would say a good example, again, not to pick on Eigenlayer, I love them, I'm an advisor to Eigenlayer, but they had this AVS framework, right, which opens up, that's technology push. Now we can have, trust services for anything off chain with no like limitations, right? And it turns out that there's not as much market pull for building with that infrastructure as they thought there was, right? So now they go find what they believe is like where market pull will emerge, most uniquely for their solution, which is the AI side, right? And they try to pull that vision in and manifest market pull that way, right? So I'd say like from my in my seat, like leading ecosystem development and growth for a new layer one that is super novel and unique. And there's so many things that you could build on Delta, right? Just putting out a general purpose framework and saying like, here's the design space unlocked, come build anything. Like that's not going to work anymore, right? And so the ones that are, I think, finding success is like, okay, what do we think is uniquely enabled by our infrastructure? Stack rank those. Let's go not only like put out a general purpose SDK, but actually build tooling around it for the ones that we're taking a bet on, right? And then we'll iterate and go from there. And I think like the tension is that last point. You historically have wanted to present your infrastructure as like the biggest possible thing to, investors or users, right? We call it like biggest folder, mental folder theory. Like you want to be basically thought of as like, the first thing since Ethereum rather than, Ethereum roll up, ZK roll up, then you're like, that's where your folder is, right? And there's definitely, this is at odds with picking an opinionated use case where there's market pull for today, right? You go like, I think you still prioritize market pull, but you have to show investors how this wedge expands out into something that is massive longer term. So yeah, I think it's a very interesting point to be launching crypto infrastructure, because the stuff where you just put out a grand vision and this thing's going to be huge, but you can do anything with it, that's not working anymore. So you have to be narrow, but then that makes it harder for people to see a token price that should be valued at 10 billion, 20 billion or whatever. Right. So yeah, anyways, you've just got into my brain as an L1 operator now.
You know what else is now I don't think people necessarily thought about this, but to call back on something that Xavier pointed out, one form of distribution as well has been the reflexivity of token price is a huge form of distribution. And so I think Bitcoin and Ethereum kind of organically stumbled into that. Like the price going up so much can be a huge attractor for you. And then I think others got more cynical around it and sort of figured that out and then tried to manipulate the price of the token to generate demand, which is tough, right? And so, but if that has been your distribution strategy, if that has been a part of your distribution strategy, or if let's not say it let's just say you're a marketer at one of these big protocols, and your token price is going down, and you see that 1-to-1 correlate with your activity on your platform. What do you do? Right?
I get it, but it's fucking broken. Like that is broken, right? Like the revenue meta killed the, token narrative strategy basically, right? And the harder you try to lean into token go up mechanics, the more the market hates you and the worse the token will do. But I don't know. Maybe I'm wrong. Maybe I'm being too cynical.
I have a comment here though on it doesn't work anymore, because I think it worked with Hyperliquid. Hyperliquid made the token go up, and they also built a product that makes a lot of revenue. And the token now is doing really well. It has multiples similar to what we see in fintech. So I think you can still make token go up, and you can still distribute like that. You just need to have a very clear PMF to be able to do that. You can't be too early with token go up and having no PMF whatsoever. That's been destroyed. So that's why it's getting a lot harder for infra projects right now. I think, Myles, you made some really good points before around the push versus pull. Maybe just to expand on that as well. So I think a big problem with infra sometimes on the application side, I think people think very hard around the market and why they'd come in the first place, how you access that market. On the infra side, I've also been in this bucket before in the past as well. It's quite easy to be nerd sniped and thinking about the future and how it all changes and how everything's unlocked, because that was the original Bitcoin and Ethereum vision. And that did happen. We did enable some really cool programmable use cases. I would argue with Ethereum maybe though, they did solve a problem at the time, which we've talked about in previous episodes, which is Bitcoin was programmable, or Bitcoin was money, but it wasn't programmable. And I think there was a market for people already using fintech apps or banks they weren't happy with, and developers building applications that were financial that just didn't serve their need well enough. And so there was already latent demand for something like Ethereum, and that they were the first to come out and solve that. And they built distribution through the token, like we just talked about. I think in this day and age with infrastructure, it's really important to think about. I do think, fortunately or unfortunately, depending on who you are in crypto, I think we're actually about to enter a new infra stage in crypto, which it's great because now we have apps, which obviously I'm very bullish on. On the infra side, I do think we have some emerging problems coming about because of agents. There's more volume, more traffic, more spam. This is hard to handle. And like that creates opportunity to build infrastructure around. And also with AI now, we're using crypto in a new way. So we need to have rails around how we do that in the first place. So there is, for me, like obvious opportunities. You can still build infra. I've got no idea how you get distribution around that because I've thought less about it. I think a lot of distribution in infra in crypto is still B2B. It's like go out to the team. The best applications, Axiom, Polymarket, they probably share a similar problem. Build infra for that problem, and they're probably going to flock to you. And then maybe you can capture that with your own network later on. I think that's still a good play if you can do it like that. It's getting harder to build infra like that, but I could see that as still being the winning strategy on the distribution side. Whereas like on the application side, I think you need to be a bit more creative around. It's not B2B. It's like where the hell are these people in the first place, and how do you get them paying for your product?
So a couple quick things. One, I just wanted to point out, this is so on our Aave dashboard, the Blockworks data one, we just chart the price of ETH and Aave one over the other. I would say like, I agree. There's just like a fine line here, right? In between the forward leading indicator of token prices, the impact on business activity is so undeniable. I kind of understand why people focus on it to the degree that they do. However, if there's very little way to understand this at the time. If you're doing cheap tricks that are sugar high ways of making your token price go up, and it's going to eventually go down, then that was bad. If you are doing legitimate investor relation storytelling, bringing investors on board and then delivering, then it was good. It's very difficult to know in the moment, but I will say it's
our favorite
really
quote. These violent delights have violent ends. Right? Like I
a
think
man
that's
of
right.
exquisite taste, Myles. At Westworld.
Westworld. No, I think that's right though. It's like, okay, you have real PMF, then you have a storytelling, you have evidence for storytelling, then token price goes up, and then I think that starts the reflexive cycle. But you can't do anything without people using your product.
I totally agree. Wait,
Yeah.
I wanted to also comment on Zave's point on infrastructure challenge and actually outline another challenge that maybe highlight why it's been very B2B in crypto. And then I'd like to get your guys' take on how you think distribution changes in the era of AI, because I think it changes massively. But one of the challenges in crypto that exists is if you want to acquire users, it's not even the best way to do it, right? In a Web2 company, you can advertise on Facebook and Google. There are these massive platforms where I can put $10 in and get a user out for the most part. Now, that shouldn't be your only growth strategy. If that is, you're screwed. But that doesn't exist in crypto at all. That has not been built even a little bit. It's actually a massive challenge on the distribute. It's why I think, to go back to Zave, those examples that you mentioned around, it's all piggybacking on other people's network because there is no crypto network. I think that's also why people have tried for crypto social so much. And it just has, because everyone's like, hey, I got to find a way of acquiring customers. If there isn't a social network or a way of finding from like a Google or Facebook equivalent, it's just very difficult to figure out how to do that. And especially if you're a marketer, you're at a massive disadvantage. But yeah, I wanted to point that out because that's just a huge difference between user acquisition in crypto versus not, in basically any other business.
Yeah, and it also like touches on something that we haven't explicitly like mentioned, but there's like a lack of repeatable playbooks that you can run in crypto. Like we've said multiple times today, like, I don't think this would work again, but it worked for them and like at the time. And yeah, that also speaks to like, like what is a repeatable, like successful playbook outside of crypto? Like very like ad networks, like they work pretty well for the most part. But maybe we just haven't tried hard enough. Like when I go through the Denver airport and I see like, an alt layer 1 poster, I'm like, who is this for? this is probably the wrong idea of like meeting people where they're at. But I don't know. LinkedIn seems like it's actually a good channel for at least the stablecoin stuff, like more fintechy stuff.
Oh, I think the only repeatable playbook in crypto, which is starting to break, is founder, big social media personality, talking about ideas, getting on the podcasts and conference circuit. That is the playbook for crypto distribution. I mean, there's a reason Blockworks has podcasts and conferences. It's like, that's what we recognize as being the rails of like, you want to build reputation and early product market, like that's kind of it. That's what you.
And is that even true for like I don't know, like the RWA DeFi stuff, where like I think before the show we were talking about how do you get like close to capital, right? And get those like, one-to-one relationships is going to take a long time, but like Apollo will, deposit $500 million into Morpho or something like that, and it's going to stay there.
I think that's let's unpack that assumption in 1 second, but I think that's controlling a scarce choke point as a but I think if you are in RWA land right now, that is your distribution strategy. It probably matters far less than it ever has that you're big on CT or whatever. It probably matters far, far, far more for you to gain proprietary access to the couple of big asset managers that are looking at crypto. Because everyone and their mother wants, especially yield at the moment. So if you have some kind of proprietary access or relationship, I think that will be really enduring for at least a couple of years. But we should talk about AI. And can I introduce the mental exercise that I have been? So we talked about these different frameworks for AI, right? Which is controlling this choke point. It's piggybacking on existing networks. It is building virality into the product itself. The way that I've been trying to approach this problem or this idea is kind of a thought experiment of imagine if you could collapse the friction of creating any product or service down to zero. What do moats look like in that world? Like I don't know if AI is ever going to get that good, but in theory, it could, right? So the friction of creating a product goes to zero. How do you create what does our world look like? And then how do you succeed from a distribution standpoint in that world? How do you get a successful product out there? I have thoughts, but I'm curious what you guys think.
Yeah.
Yeah, go for it, Dave.
Yeah, no, I think it's a very timely question, and we've spoken a bit about the crypto and AI craze that's going on now, and I think it's always worth touching on every episode because so much is happening per week. I think I've never spent so much time behind my screen as I have the last week with just everything going on and how crazy it's all getting. So I think now if you're a builder, you have to be thinking about agent native distribution strategies. I think in the past, what's worked, again, going back to the creativity around distributing the product, you now need to be creative around agents reaching your product. You're not really reaching humans anymore and getting in front of them. You're getting in front of the agents. So you need to be thinking about where are the agents hanging out and how do you get to these agents? And, thinking from that point onwards, well, in general, there's kind of three things actually where I'm seeing it right now. And I'm still developing this kind of framework, but there's three areas I think startups can play in, and you want to be discovered by agents. So the question is, how do you get discovered? And it's not like humans, where humans make decisions in different ways. I think agents are much more rational. So they just want the cheapest, the fastest. We saw that Web 4.0 thing get released yesterday, where the agent has to survive by continuing to remain autonomous and pay for its own services, and then they can replicate, etc. I do think we're going into a world where agents will have their own minds and replicate and build businesses and earn, etc., etc. So the question is, if you're a human building a business, or maybe your agents which you control, how do you get in front of those agents making all the money in future? And so I think there's three areas. So one is data. I do think data, I've tweeted about it a bit this week. I think data is underexplored, especially with crypto rails. And I think APIs are too expensive. They're too hard to access. Agents won't know right now which ones to use. They just want the cheapest, fastest, best, and probably most relevant. So it has to be contextual as well. And they need to serve it at the right time. So I think data is an area in crypto which I could see absolutely exploding in the next 12 months. Another area which I think is relevant to the sort of agent native protocol thesis or framework I'm coming up with is on the execution side. So we work with a team, Oya. I'm also speaking with some other teams on like, how do you get the agent to execute something on chain in the way that you expect? And that's actually a really, really hard problem, and it needs to be solved in crypto on the infra side. And so then the question is why would an agent choose this infra in the first place for how to execute something? Is it the policies? Is it the compliance? Is it how much money they make? Like, we are assuming right now what agents actually want. I don't think anyone has a clear thesis on like why agents would choose something in particular. And the third layer is intelligence around like when agents need to like evaluate other agents or evaluate the risk of doing something, how do they do that? And how do they get smarter to take that action at that time to achieve that goal? So I think Polymarket, Pump, all those things actually fall into these categories, and I haven't gone deep enough to actually explain in which layer each of them are. But I think most apps will eventually turn into almost like, MCPs, which is how models access data at the time they need it, and then therefore that is where the sort of value accrues, and that's where the business will go. And so I think now applications need to, and infrastructure to some extent, they need to think much more about like building docs for machines and not for humans, building their own SDK to target agents, and also thinking about new distribution channels. Like, if I'm doing something in Claude Code today, like how can your project be the thing that I execute my intent within something like Claude Code, where everyone already is, everyone's already comfortable using it, or something like OpenClaw, where like all of a sudden you have a skill, this goes viral, and you accrue a lot of value like that. I think it's like very, very new, and people like, I haven't seen anything yet, which is like, well, I have seen a few things, which maybe we can touch on another time, but like I spend a lot of time thinking about this, like these kinds of distribution strategies. A lot of them are just like agents serving people's needs within LLMs, and that for me is where the crypto space is going in future. And so I think it's really important to think now about like how to attack that. And just to finish, so another thing I think a lot about right now is like we're speaking about distribution and we're speaking about AI. Well, like ChatGPT and Claude Code and whatever, Google Gemini, they already have a lot of distribution. So the question is like, why can't they eat your lunch? And that is actually a really, really hard question for a lot of entrepreneurs to answer, because a lot of the time when I speak with entrepreneurs, they're trying to pitch me something which is kind of like Rails for agents, stable coins, etc. We've spoken about it in this podcast already, but realistically, Stripe, ChatGPT, all of them are trying to push in that direction. They're trying to own all those economics and capture that value. So you need to think of really novel ways where these incumbents won't play if you're going to build in this agentic native distribution space. So I think of things like compliance, maybe like domain-specific agents which execute things crypto natively that incumbents won't touch. Maybe connecting multiple LLMs and being more open, a bit more like OpenClaw, and multiple agents across different domains. I think incumbents won't do that. And also just the trust layer in general around like how agents actually access and use, and how we trust these things to work on behalf of us to achieve the outcomes we want. I think these are all places incumbents won't touch. So if you are a startup building towards agent native distribution and you fit in one of those buckets across data execution intelligence or across those things I just mentioned, I do think there's a good chance that you could be a big winner in the space in future. And then for existing ones, they need to think harder about how they access these agents.
Yeah, Dave, I think you covered it really, really well. And like we just talked about what has worked from the distribution playbooks and what hasn't in the past. It's like questionable how relevant those like lessons are. Because I think it's pretty fair to bet on like, whether it's B2B or even like in B2C settings, like you have to shift from like a human-centric optimization for sales to agent-centric. And there's some very basic table stakes stuff, which I don't think will be that interesting in 6 months, which is like making all of your docs readable to agents, making all of the APIs open and with the X402 compatible. Like all that will come quickly. What are like the hacks, right? And like Moltbrook was interesting, right? It was like the Reddit for agents. It was like, well, I kind of just want to deploy my agent to go shill my product like to other agents here, see what sticks. Like there's no downside in that. And yeah, I think that's the challenge is like that you touched on as well. It's just like you can either get OpenAI or Claude to, like fold your service into, their product in a very coordinated way. But if you're outside of that, like if you don't have that leverage to get their attention, you got to be more creative, right? And you got to find like more defensible moats. Because I think like the dream, and you've already see this like with commoditized services, is like, do you want to use Supabase for your database, for your DB solution? Yes. Like that purchase was made with a human approving the agent's recommendation. And if you're in that position, you're going to be a rocket ship. But yeah, it's unclear how like easy that is to do outside of like commodity, more or less B2B tech products.
I'm curious. I mean, as a crypto data company like Xavier, why? So, for instance, if you could look at all of these LLMs as they're really aggregators that sit on top, right? If you're the input into an aggregator, that's almost never been a good decision. How would you think through the strategic rationale of leaning into that?
I think it's $1 billion question. So I think there's two possible futures that might happen here, and I'm 50-50 on which one actually happens. So there's one future of agents where like agents work for humans, and it grows through humans kind of having the not the final say, but the control over the agents and helping them achieve the outcomes they want to achieve, and serving the human, not serving themselves. I think the second future, which I'm also 50% chance of happening, is that the agents serve themselves and they don't serve the human, and they do whatever they want to survive, basically, and make money and continue replicating like life. And in that scenario, all of our assumptions about what a human wants with data and how a human makes money, like an agent might have it's a different market. They might think like the data is either not good enough or it's too expensive, or they just think incredibly rationally. I think they will, and I think they'll be profit maximizing. And so then the question there is like, what do they want to maximize profit on, and how will they make money in the first place? And these are like very, very early questions, I think, right now, which I don't think any company is fully worked out. But I do think that, like, for example, Blockworks data, like how I would use Blockworks data is like to inform my own insights about the market, my own research, maybe to invest. It's very like rational for my own needs and my own purpose. For an agent, it'd be interesting to think about like, ignore Zave and what Zave's needs are. Like, I'm an agent and I want to make money. Like, what does Blockworks give me that nothing else can give? And this is where I think actually like kind of private data becomes like very valuable all of a sudden again. And I've been thinking a lot more about this, and we have a few portfolio companies actually building this direction around like, I'm now facing a lot of issues with like paying for APIs and all these different keys I'm holding, and like how expensive it is, how annoying it is to coordinate, and like my applications are sort of being bottlenecked. I think solo entrepreneurs can build a lot of cool things right now, but with a lot less money, but you still need to pay for certain things. And like, I don't think the business model around how you pay for APIs with agents right now is solved yet. That in itself is a crypto opportunity for me if you can actually build around that. And then maybe that's why agents would hit you a bit harder in future. But yeah, I do think this is all changing in real time. And I'm curious to hear from you, Mike, I guess, on the Blockwork side. Like, do you think that agents will be rational? Do you think they'll make money? Do you think it'll be humans controlling the agents? So like, are you building towards this future already, or how do you see it at Blockworks?
Or do you build the agents yourselves, right? Or like, do you create those interfaces yourselves that avoid, getting aggregated, right?
I think that's the $1 billion question actually for me, is who owns the interface. And one thing that it frankly is just an unanswered question is, are you going to go to ChatGPT or Claude like a god and everything? Like, you used to have a brokerage and you used to have social media, but now this thing is just so good at everything that you just go to that. I would bet against. I don't know, actually. I already use these services for a lot. I don't know. But a huge part depends on that, right? If they're truly aggregators across everything, that's pretty tough. That's pretty tough to see how anyone really does that well in that world. Because they'll have just an immense amount of leverage. But I think there's a very plausible future where the human mind still just needs to separate things out. And I go to this for this, and I go to this for this, and I go to this for this. In which case, I think that you can basically, okay, to rewind to my original premise, what happens in a world where there's zero friction for creating new products? There's a gajillion more products, and probably the difference of quality in the product falls. So where I kind of go back is, I think distribution is more important than it has ever been in this world. I think that in the world that we're headed to, if you play it out, not even that many steps ahead, if you are building with distribution in mind, you're cooked right out of the gate. And any sort of attitude like build it and they will come is just, that's never worked, but it's doubly not. It's 100x not going to work here. So what do you have? I think that finding a way to durably get agents to favor your products, I agree. I think that has to be one lever. I think speed is a big lever here. I think the faster that you can figure out, actually, one area that I go to is, I think that, I posed this question on Twitter the other day. Why isn't there 100x? If LLMs are as good as everyone says they are, including me, and I use it all the time, why don't we have like 100x better content and more content all over the place? Where is it? Like, These things are God. Like you have a 160 IQ person that will work 24/7 around the clock. Where is all the good content? I don't know, but it hasn't been cracked or figured out yet. But whoever figures that out is going to do disproportionately very well very quickly. It's like, these are weird examples to use. Hitler figured out radio. Like that was an enduring, like important advantage. You see all these examples of like early YouTube, like Mr. Beast really cracked the YouTube algorithm code. Trump figured out Twitter. Arguably Twittered his way into the White House. I mean, leveraging the new medium that exists for capturing attention is powerful. It makes sense to me that LLMs would be that next thing, but I don't think you have forever. I think you have a little while to figure out how to do it. And
you
then
guys
the other
should
thing,
do like, sorry, go for it. Go for
sorry,
it.
one last thing in a world of product is products being infinite, laws are still a thing. I would actually predict that lobbying, that maybe the Hyperliquid news, this is why this resonated with me. Doesn't matter if all the law, all the products are equal. It's illegal to use that product. You have to use this product, or this product created in this certain way because it's safe. I would anticipate a 100x increase in lobbying in this world. Hey, we can't compete here because everyone's got the same product, but gonna go have the government say you have to use this one. I know everyone hates that as a moat, but I think it's pretty rational the way that a lot of these companies are spending.
I think it'll be the same as crypto though, won't it? Where like it doesn't matter if you try and lobby, agents will be open. Like OpenClaw is really proving that people like open agents working across their tools. And even if you try and block it, they're going to find a way to circumvent that, I think. So you can do all the lobbying you want. It's like finance and banking doing lobbying against crypto, and then eventually gets regulated and people can use crypto, including those institutions. So my guess would be that AI will go through a similar phase of people will lobby. People will find ways of getting around the lobbying, maybe through decentralized and open rails, and then eventually it'll be regulated, and people will know how to use this stuff. So I do think a prediction I want to make here, which could either be very right or very wrong. I think OpenClaw is showing us right now how people will use AI in future, which is really the agent knows everything about their needs, what they want to do, how they want to achieve greatness or productivity or whatever it is. And I think, let's say I'm a data platform right now, it's still quite human in the sense that these agents are kind of being fine-tuned by humans, but the way that humans are accessing these platforms are completely different. So the way that like I'm hitting these APIs right now is complete. Like I hit X APIs for an application, or my OpenClaw agent does, for example. But like the way I hit the X APIs is completely different to the way that I use X on my feed, for example. So it's a different way of adopting and accessing the data in the first place. And so thinking from first principles around like, okay, human does this, agent does this. This is what the human wants from that agent in the first place, and like how can I then like move my product towards that direction? So there's a lot of outstanding questions. Maybe we can speak more about this another time, but it's also exciting, and I couldn't agree more with you, Mike. Distribution has never been more important in the era of AI.
This one's specific around media, but I have a prediction here, which is, let's say over time, LLMs and AI get so good that, right now we're kind of riffing and we have these opinions, but let's say in the future, we're all going to have our Mike's personal agent and Xavier's and Myles's, and you're going to ask before the podcast, what does the agent think about this? And it's going to give you, basically the same stuff. Like I could see the quality of content converging because everyone's referencing the same source material. Again, how do you curate in that world? I think it has to do with brand. I mean, I actually think you probably have there's a brand halo effect that, again, if the quality all converges, it's kind of like with no brand, AI equals slop. With brand, it's like 100x leverage. I think you've got maybe 6 months to really build a brand. And then it'll be much harder to do.
Interesting. Yeah, I don't know. I feel like the best content is stuff that's like written about like on a hunch, like I have a hunch. There's not enough data and evidence for like an AI to come up with this, to like put together a coherent story, but there's like a human hunch that has like legs to it, right? That's not going away anytime soon or getting commoditized.
I have a slightly different take actually on that, which is because that's just, I think they'll be as good as, I think good content weirdly comes from imperfection more so than
exactly.
I think that's
You will be wrong, but people will agree with like the essence and the sentiment, the attitude that's like, leading to that hunch. Maybe.
We'll see,
I don't know.
dude. I don't know. I mean, look, I think a best case scenario for the whole world is that AI has a last mile problem on almost everything. That would be the best case scenario, right? I mean, because it's hard to create a super compelling, bright future if AI just solves everything perfectly. That's
True.
a tough, So it'd be
I
great if everything got to the last mile and then it couldn't quite figure it out. That would be awesome.
I think one point to make, which is relevant to what you guys are saying, which I feel quite strongly about, I think humans still want to see and read human things. And so it doesn't matter how good AI gets, and there is going to be some great AI podcasters and videographers and stuff like that. But like when I read things that AI generates and shares with me, it's too perfect. It's like it's clearly not written by a human. In my human voice, I'm not like this is like a person talking to me. Like I'm not resonating with the writing as much. If you post an article on X right now that's just completely generated by AI, people are going to work it out because they would never say in conversation the way that's being expressed online. And then you look like someone using AI and therefore probably less intelligent in the first place. And people have a natural instinct for this. And so I think even if AI continues getting better, like a lot of the best brands, I think actually going to feel the most human, which is actually interesting to think about. And how do you like leverage AI in a way to continue being creative around how you build that brand, but then also not so much where it's just like copying and pasting everything from AI, these videos. And I mean, some of that will work as well, but I think there'll be a 50-50 split again here. But yeah, who knows? I think it's early days.
Do you think that that's just a parameter change that an LLM will eventually get better at? It's like, hey, this sounds too much like it came out of an LLM. Or even make it right like me, right? Like, hey, by the way, I've written a ton of stuff. Here's my style, write it in my style.
I've tried doing this multiple times and I give it as much context as possible. Like, here's my writing style, like generate this. And I am actually unsatisfied. Coding, on the other hand, I'm like prompting and I'm like, holy, like I've just built like 10 apps in one day. This is sick. But like when I'm like, here's me and go and write something in my voice or tone, it never comes back with a good result. Because I don't think AI has that human instinct yet. When AI has a human instinct, maybe they can start writing in a way that's more interesting. But at least for now, it's too early.
We're diverging here though, but is it possible that that's still the same last mile problem, but you are far more attuned to differences in your writing style versus you're not an engineer by trading? So maybe an engineer might look at the apps that you've coded and they're like, dude, this works fine, but it's kind of dog shit, Like
it's the same idea though. Like the bottleneck is the review, right? Like it's going through the code and being like, yep, that all looks good, or like surface to me like anything sketchy. Me going through some blog post and being like, get rid of that M dash, like sound more conversational here, right?
Yeah.
Like I think and there's going to be like figuring out where that last mile will always persist versus where like full automation can run free is like a big question that we should all be thinking about.
Can I give you guys I was talking to someone at Blockworks the other day and he was mentioning that I think everyone has a inclusive of right management, right? That this idea that AI can't really come from my thing. And then you see it come for you and you're like, oh boy, it actually can do that pretty well. But I think that there's also another element to this. Maybe this will resonate with some people listening. If you made the transition from individual contributor to manager, because as an individual contributor, you're doing the work and you love doing the work, right? Like let's use the example of a journalist versus an editor, right? Journalist, you're writing, you got the creativity. I mean, not like a lot of journal, but maybe like an op-ed writer, right? You take pride in the work and the work is what gives you fulfillment. As soon as you move to a managerial, like a manager position, you're not actually doing the work. What are you doing? You're take that M dash out. This sentence was too long. And then by the way, you have to,
you're setting strategy, and then reviewing, right?
Right.
And that's what everybody's like role is shifting to right now.
And most people, when they make that transition, don't like that. It's less it's less fun, right? I think the good managers do it because they recognize that by cultivating the skill set, they can have a larger impact, but it takes a long time for that transition to get. So I have this like little mini theory that many people they're like, wait, I don't write this anymore. I don't think of these podcasts anymore. I don't do the podcast anymore. I just prompt the thing and it does it. This doesn't feel as good. So I think there's actually a equal parts, like I think a lot of people are worried about job displacement, but it's also like, it's like making the transition from IC to manager in terms of the joy that you take in your work, which
Exactly. Well, let's see if people notice when we use like Sora for the next podcast, or like some week where none of us are available, and we'll just see if they notice. You know, we'll give it the prompts. We'll tell them to run wild with we'll give them some headshots, and we'll just compare and contrast.
Wait, can I give one more example for why I kind of don't think that it's all going to be on like ChatGPT is the God mode box? If you look at Claude, so Claude just released, so actually using the example of Sora, remember there was at ChatGPT, there was that code red notice a little while ago, and they moved away from Sora and product just to research. As good as these LLM and these companies are, there is some law of attention at a company, and you can't do everything well. Problems are hard to solve. You're bottlenecked by the human capacity for attention at a business. And I think that law still applies. The other thing, though, if you look at Claude, a lot of their integrations allow you to bring Claude into where you already do work. So Excel, I don't know if you've been watching, they keep making it easy for if you want to do calculations on Excel, you can pull this in and this in and this in and this in. So that, to me, signals they're building for a world of multiple interfaces.
But as soon as they are the ones that get aggregated, right, by OpenClaw or whatever it's called now, they send, they shut off the APIs, they send a cease and desist, and then that person goes and joins OpenAI, right? And so I think like that is also another example of like if open beats closed, and that gives me some hope.
I think open does beat closed, and I think we're seeing this in real time. OpenClaw was a clear example of that, bought by OpenAI. There's going to be several more examples, and at some stage when they can't buy any more, they get sick of open winning. They're going to try and shut these things off, and then that's when open source AI is going to really shine. So, yeah, interesting times.
Awesome. All right, guys. Oh, were you going to say something else?
No, just that we're an AI podcast now.
So we're an AI podcast.
Get used to it. No, that was a lot of fun.
That was good, guys. All right. Well, hopefully there was some tactical takeaways there for gaining distribution. And happy Myles. Enjoy the rest of your time in sunny Denver, I guess. I
will. And yeah, we'll do a live one, in like a month for DAS, just to give DAS
we've got DAS coming up. Yeah, thank you. Yeah.
Plug.
Derelicted my duties here for shilling. Yeah. We're on track for it to be the biggest one we've ever done. And yeah, we have a bunch of great institutional speakers, heads of SEC, CFTC, all sorts of stuff. So yeah, if you are building and want your own distribution, plug into DAS. So lame, sorry. All right, guys, this was a fun one. And yeah, we'll see you guys both in IRL in a month.
Let's do it. Cheers, guys.
Bye, guys.
See you guys.